The Johannesburg Stock Exchange is weaker today, along with its global peers, as inflation fears continue to weigh on sentiment. Inflation continues to be a headache for investors, and this is despite assurances from the world's leading central banks that accelerating inflation brought on by supply chain disruptions would indeed prove to be temporary. Mr. Zwelakhe Mnguni, who is Chief Investment Officer at Benguela Global Fund Managers, joins us now to talk through the latest business news. A very good afternoon to you, Mr. Mnguni. Thank you for your time today. If you could give us a sense of how the markets are performing so far today in intraday trade.
Yeah, thanks a lot, Tammy. The SA market basically followed the global markets down. So last night we saw the US was down about 1%, and I think the East in Japan, they were down 2% this morning, and Europe is down around 1% broadly. So our market is following on that trend. I think one of the key highlights, as you quite correctly pointed out, is the fear around inflation, that inflation is going to drive rates or lead to rates being hiked in many geographies. So as a result of that, the market is a bit worried about that rising rates work in opposite direction, because the value of the earnings get discounted using those rates. So it becomes quite a challenge for the market to continue rising in that environment.
Now, we see that oil prices did drop today on the prospect that the OPEC Plus supplier alliance might step up a planned increase in output, and this really is to ease the supply concerns. Can you talk us through those sentiments that are driving those moves?
Yeah, certainly. So one of the key things that's been behind the rapid rise in oil was the gas supply shortages in Europe. So essentially there are three, we all know that there are three fossil fuels that are being consumed mainly to drive for energy. One is oil, one is coal, one is gas. And Europe predominantly uses gas. And when the gas price spikes because of the shortages, there was then a challenge to essentially switch into oil, so that they can burn the oil to produce energy. And that is the kind of thing that basically stoked oil price. So there was certainly an element of OPEC keeping the supply tight so that the oil price doesn't drop too much. But what we then saw was this gas shortage that then led to a prospect of aggressive switching to the utilization of oil, and the oil price spiked to over 80. So it's pulled back because OPEC is saying they might actually soften their stance in terms of the amount of oil that they allow the producers to produce. So that is what is pushing back, and I do think that it could have been worse had it not been for the fact that China actually released some of their strategic oil reserves to the market to try and cushion the rise in price. So it's a combination of factors, but certainly I think where we are, we've gone too far too quickly. We might probably see a short-term pullback, but the pressure is still there for oil price to rise.
We see NERSA rejecting Eskom's price hike plan. They've sent Eskom back to the drawing board. What does this mean for the power utility, and indeed what does it mean for electricity supply?
Yeah, I think what is very clear, in the past, Eskom used to agree with NERSA or make an application to NERSA for electricity increases for 3 to 5 years in advance, and then they'll then implement those over time. What they are saying now is that they must apply actually on an annual basis. And the sense that one gets is that NERSA seems to be suggesting that Eskom needs to get their house in order. They cannot keep pushing the electricity prices through to consumers. So to give you a sense, electricity prices up over 175% in 10 years. And the sales at Eskom are up only 15%. And that highlights the fact that the electricity supply hasn't kept up. So they haven't been producing at the same pace because of the blackouts and all those things. And what seems to be happening is that NERSA seems to be saying They need to actually get their house in order, not just rely on electricity price increases to basically balance their books. So Eskom is trying to use the price increases as a balancing factor to keep their business going. But now there's an operational efficiency that is needed.
Now, ABSA's manufacturing PMI dropped in September. Does this point to a weakening, perhaps, in the manufacturing sector, which was on the way to recovery?
Yeah, it's probably not a very concerning, it's a slight weakness, but certainly what it highlights, it highlights the shortage of raw materials. So there seems to be a challenge on the time it takes to get the raw materials, and that's a global problem. And the second thing is the rising input costs, because the shortages in raw materials lead to price increases, and those price increases have actually hit the production level. So the producers are not sure that, or the manufacturers are not sure that they will recover the amount. So they basically have to work their way through the inventories to get to price increases to be able to continue producing.
Mr. Zwelakhe Mnguni, thank you once again for today's market update. Very much appreciated.